Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linden Associates with your agriculture update, and this is for Monday, the 30th of October, 2017, one day away from Halloween, and we're about 2:25 p.m. Central Daylight Time. In the grain market, corn stable. That's the best you can say. I want you to look at the size of this trading range, 2.5 cents for the day. I want you to look at wheat, 6 cents, beans, 10 cents. You still have the pressure on the beans as I see it. Cotton got a little bit of a bounce today, and it's not a surprise to see some of the softs going up because the dollar was lower as foreign currencies rallied against it, and the bonds and the notes had a good-sized rally. Disappointment, as one would expect, that if you think that tax bill is going straight through and going to be done by Thanksgiving, I don't know what the heck you're thinking. They're going to have fights at every twist and turn. I wrote about that last night in my updates and gave my clients a taste of all the questions. And to see the market stall out today is now they're trying to figure out how to pay for everything. All the lobby groups coming in to do their fighting. It's going to be a mess. It's not going to go simple. If you think so, God bless you. Of course, it didn't help the market to see Paul Manafort and Mr. Gates both indicted. Mr. Papadopoulos, I think that's his name, he pleaded already with the FBI. So there's a lot more drama going to happen here. And does it suck in the president in any way is what we're going to be looking at. As you can see on the weekly area chart of closes of the soybeans, you've gone from 935.5 to 1000.25. Now you're slipping back. Today's close is about 4 cents away from the break low close we've had. If that's taken out, then I can look for a bit more to the downside, maybe into the low, 960 area. And if that's taken out, I'm telling you, people will be then saying, is 935 the next area? So this is an important zone. But you're still in an upthrust as the market's made itself a pattern of what? Higher, closes, and on reactions, higher and lows. So you've got higher highs, higher lows. When we come to a daily area chart, you've gone from 1000.25 down to a low on a closing basis of 982.5. You bounced. Now you're down a little bit. That last break low close that I was looking at was 976. Then here's that in the 960s that I was just talking about. Let's go to the chart here and see what's been happening. You know, at first when the market had this big up leg and it started coming down a little, I heard myself and others saying maybe that's a flag. Well, that doesn't certainly look like a flag at this point. I guess somebody could say it could be if it were to break out suddenly to the upside. But it just looks to me like a market had a big move from 970, just over 1010, and it's trying to recoup. It's probably done 2/3 of that already. When we look at the swing line study, which is an indicator that I wrote, so that I could easily, actually I wrote it when my son was probably 13, 14 years old, and he's in his 30s now. And I wrote it so that I could have him, at that age, look at any chart and tell you if the market was in an uptrend or a downtrend with one simple rule. The rule is that you define an uptrend as higher highs, higher lows, a downtrend, lower highs, lower lows, and no trend has some combination of a higher high and a lower low, but not a stepping ladder impact. Well, right here you've got lower highs, lower lows. Therefore, I define that as a downtrend, and that pattern stays intact unless you take out 993.75 under the current formation. I then apply moving averages because I think so many traders look at moving averages on charts. They want reference points. And a moving average is typically not a forward-looking indicator. It's backward, but it gives you an idea where support was. And as you can see, the market rallied up to support from Friday's low, gave it up. Does it get back to 976.5, the next support zone, or not? That's as I question the market. I will call, though, because the swing line is down and price is under the 18-day average, this. The trend is down as defined by the swing line. The bias is down because you're under the 18-day average of closes. Support comes in the neighborhoods of 76, 976, let's call it to 969 and 3/4. The lower Bollinger Band and the 100-day average of closes. Momentum in the market is continuing to drift lower. So I've got the trend down, the bias down, and momentum still down. In the meal market, we have a market that put both numbers that make up the momentum indicator called slow stochastics under 20. You see that right here. Were they under 20 on Friday? No. So they're just oversold at this point. Battleground is the 100-day average of closes. You've been fighting there for 1, 2, 3, 4, 5 days. If the market can get under 311.5, the next support zone is 308.5. What this market is doing is it's giving itself a sideways trading pattern as defined by the Bollinger Bands, which are meant to keep the market trading within them 95% of the time. And what often happens is before a big move happens, you go sideways in a market. Think of this as a pipe, the black lines and a spring in it coiling. The tighter it gets, and you'll see this in corn, the bigger ultimate move that comes out of that. In the soybean, at least that's my philosophy. In the soybean oil, the daily bar chart got up again to the upper Bollinger Band, hit resistance. Market had a one-day reversal, but unlike the others, I want you to look at both numbers here. Both over 80. They were over 80 on Friday and over 80 the day before. That is called converting the market from overbought to locking in a bull trend, and it stays that way under my definitions until the red line closes down under 80. It also means that I would expect on pullbacks to see aggressive buying by the bulls. And another event that you have to keep your eye on is the 18-day average in relation to the 100. It acts like it wants to get over it, which could be called the bullish crossover. In the corn market, this is what I mean by that pipe and how the market is just going sideways here. I do not know which way it'll break out. The market's not giving us an edge. It's not trending. It's got a lower low, a higher high, and you can see how they're well defined by the upper Bollinger Band of the lower one. What I pointed out last week was this was the first time, 4 days ago or so, when you hit the upper Bollinger Band. You haven't hit it in all this time that I'm showing on this chart, so that's months. Is that a tip-off that something to the upside might be happening? Don't know, but it's certainly worth looking at. And notice how the market just keeps hanging here around that 18-day average of closes. But you have downside bias since you're under that number, and momentum is pointing down. The wheat is similar to corn, but not as pronounced to the sideways action. It also has a higher high and a lower low. It hasn't hit this month the upper Bollinger Band. It is oversold, and it's on that band. And again, I'm going to repeat myself. 95% of the time, the market will trade within the bands, only 5% of the time outside of it. You get to see that here. So I don't know that the market's not going to fall tomorrow and try to get under it. I know the percentages are against it. Here is a market that appears to be trying to break out to the upside. Now, if you look at sugar, you can see it closed over the upper Bollinger Band today. If you look on Friday, you had a close of 1463, which was also over the upper band. So that's 2 days over. It only gives the market about a 3% chance out of the 5% that it normally closes outside of it of being another up day. But what is important is you had very big sideways action. Take a look at that. And when that occurs, you've heard what I said, often that's a prelude to the market trying to do something. Is that something going to be to keep pushing this Bollinger Band out? Right now, I think the bulls have control of the market. Admittedly, it's overbought, but the trend is up. The bias is up. Yes, the market's at the first time over the 100-day average in green in the upper Bollinger Band. I'm certainly not telling my clients rush out and buy it at these numbers, but I am saying wake up. Looks like something is going on. In the coffee market, you had been in a nice downtrend. You lost the embedded reading. Now, this is when you've got markets, both numbers under 20. Remember what I said, when the red line gets over it, watch out. Admittedly, it all happened in one day. That's not the norm. where the 18-day average, you lost the embedded reading. But that also means momentum is still alive here. Is the market capable of getting to this zone? Don't know. Here's how the market finished today, sort of stuck at the 18-day average of closes. In the cocoa market, I have pointed out repeatedly that each time so far you've hit this 18-day average, you've been rewarded with a nice size bounce away from it. And in most of the instances that have happened recently, you've actually gotten back to the upper Bollinger Band. We'll see if that's the case again. This market is not overbought, so the bulls have total control of this market. We'll see if you break through 2064. So far, it's been a pattern of primarily higher lows, higher highs. We'll see if that carries on. The cotton is caught between an upper and lower Bollinger Band, but today it did turn its trend back up. Now you've got higher lows and higher highs. The supports, 68.38 in red. The first resistance, 68.97. If the market can build momentum from here, possibly the upper Bollinger Band support. Let's flip this over. What if instead of going up, the market takes out 67.80? It would then have a pattern of lower highs, lower lows, and target 66.85 as a potential downside move. What about momentum? Doesn't exist. It's just drifting sideways at this point. Now in the cattle market, what kicked the market, and it hit limit up at one point today, was cash cattle's not released every day. You get it about twice a week, and the surprise was how strong it was on Friday, and this market is up now 3 days in a row over the upper Bollinger Band, overbought. It's been in an uptrend. And if you'll recall, a week ago Friday, not this past Friday, the Friday before, we had a cattle on feed report that was bearish in terms of we put more animals, 5% more animals on feed. Normally, you'd have been looking for a pullback from it. That pullback lasted 1 day, Monday, part of it. Ever since then, the market has just been going up. The feeders are paying attention to the upper Bollinger Band. They're also overbought, admittedly in an uptrend, but they've hit upside targets of those Bollinger Bands. The hogs are still very much in an uptrend. All this is happening in markets that, these are now export markets, of course, with a stronger dollar, and you can see how the market is still holding on. Should you take out 63, 67, I'd get a bit nervous on the long side. Other than that, I'm Ira Epstein, and I want to remind you about our chart of the day. Now, let me explain what this is. We developed an indicator, like I developed swing lines. Well, Lynn and Associates, actually it was Gordon Lynn, the original founder, developed what's called a price count. And I want you to think of it as a combination of Fibonacci, a mathematical counts on a chart, with a swing line thrown in. It's different than that, but it's the best way to, if you will, visualize it. And what happens is you might get a market that gets an up move, a down move, comes back up, doesn't fill up and get higher, and then starts breaking down on you. On a sideways action on a bottom, you go sideways, you get a small rally, you fail, then you start moving back and forth. This, again, is your downside counts, you can see, and this is the upside counts. You go up, you come back, and then you start taking off. It is not an entry point tool. It is much more of where a market might go to tool once a trend kicks in. To find out more, my staff, give them a call. You can go to our website at any time, www.iraepstein.com. You can click up here just as well if you're watching me on YouTube, or underneath us on many websites it says click here for Ira's free information. Do so. The forms will appear. Fill them out. We'll get everything to you. This also includes 2 PDFs that explain how to work with price count yourself. And if you'd like our charting software, assuming you've never tried it before to use this, we want to put it in your hands for free. I'm Ira Epstein. You have a great day. Thanks for listening.